Hey guys, my name is Ruben Dante, and today I'm going to talk about the different advantages and disadvantages of using or trading Forex versus options versus stocks versus futures. And a lot of it really kind of depends on what it is that you want to do. For example, if you think you want to replace your income and you have a smaller trading size account, then Forex is a pretty low barrier to entry. Forex is very, very leveraged. But there's a few disadvantages with Forex, like slippage. So you have to be very, very wary and mindful of like slippage, and I'm going to make a whole video about that coming soon. And then there's futures, which are also very leveraged, but you need a little bit of a bigger starting account to trade futures. I would say at least $2,000 to $5,000 if you're in the United States. But a lot of it kind of depends on also like your schedule. For example, I love trading options. I live in Los Angeles, and I naturally just like getting up early, so I can get up and then trade the morning reversal. And a lot of people don't day trade options. I actually do like to, and I'll make a whole video on that as well. But you know, if you say, for example, you live in the US and you're a bartender and maybe you want to trade from like 4 to 5 a.m. or 2 to 4, then maybe trading something that's a 24-hour market like Forex or like futures might be a lot more beneficial to you. Another great thing that I think Forex does have to offer, for example, is that if you are trading a technical analysis kind of a strategy, Forex offers great position sizing. So where you're getting started and you're playing with your strategy, you can buy, for example, a 1K lot, and as you get better and better and better and you're consistent and you're controlling your losses and you're taking profit, then with Forex you actually have the advantage of just the better you get, you just buy more contracts or more lots and you can just keep on doing the exact same thing. Whereas, for example, with futures, if you're doing technicals or price action, as it probably would be with something like futures, then you don't have a lot of room to be wrong if you have a smaller trading account and you're trying to keep your losses at $100, $200. With futures, that might be a little trickier only because of the zones you have to take or the room for stop loss you have to give yourself to take profit in futures. It's got to be a few points or ticks, which, or you know, if you're doing the NQ futures, for example, you know, every tick is $5. 1 point is 20. If you know, if the zone is, you know, 10 points deep of a stop loss, then you know you're risking $200. So with Forex, you can actually take a USD CAD, for example, and do somewhat of a similar zone is per se, like if you were to do 10 pips or 100 pips or whatever, you can make each pip count just 10 cents or $1 or $10 if you you know, as you get better. And as you get better and better, it's very, very liquid, which is a great advantage of Forex. So there's going to be a lot of ways to unload your position. An advantage of futures, though, or Forex, is that it's a lot cleaner. There's a lot of transparency. It's very regulated. Forex can be a little bit like the Wild Wild West, not so much like cryptocurrency, where that's very, very you know, you really need to know what you're doing. But Forex is up there. There's some discrepancies with different brokers, you know, the thing that happened with FXCM in the US. So Forex is futures. Forex is trickier and a little bit more shadowy than, say, futures. The disadvantage with futures also is that the NQ point value is different from the ES mini, that's different from the crude oil, that's different from where. So then you have to be mindful of expiration, you have to be mindful of the different ticks for different contracts and the value system for whatever it is you're trading. And where the most volume is at, what contracts at this month, next month, and contract rollover is also a thing with futures. So it's a little bit of a different set of rules to learn on top of what you're doing regarding price action or technicals. Options are my personal favorite, and you can get really artistic and really creative with them, and that's what I really, really like about options is that my brain just naturally is very, very intellectually curious, and there's so much you can do. You also get a lot of leverage. You have to learn the different Greeks. I don't think that's very much to learn though, really. There's the delta, gamma, vega, rho, theta. And then from that point, you have a lot of room to be right. When you buy a call, you cannot lose more than what the call cost, which, so if the ES drops 1,000 points tomorrow, which let's hope it doesn't, that would probably be a catastrophe. But you couldn't lose more than what your option costs you. So if you're buying an option on Apple or on the ES or whatever, if you're buying a call option, you're not going to lose more than what it costs you. It also has a lot of leverage. You're controlling 100 shares, and then every dollar that the underlying equity or the underlying stock goes up, then your delta value would go up accordingly, plus gamma. Something to be mindful though with options, also expiration, in the money, out of the money, how far out, time decay. I'll make a whole video on all of those things. But you have a decent amount of room to be wrong with options, in my opinion, and you can either wait it out, you can cash it out. If you're trading equities, options against equities, if you buy Apple at 175 or today, and you have a stop loss at 170, and tomorrow it opens at 155, then you're gonna get stopped out at 155 if you have a market, and you lost all that. With an option, you're not going to lose more than what the option costs if you're buying a call. If you're selling a put, you're kind of like I like to explain selling puts kind of like real estate. If you are, it's like collecting rent, either monthly or weekly. If you sell a put for Apple at 150, and you collect a premium every week or month that it doesn't fall to 150, it's just free money. If it falls below 150, then you have the obligation to buy it, but theoretically, that's where you would have wanted to buy it anyway if you're going to sell a put. And then you can also cover yourself by selling or buying the put right underneath where you sold it. So a lot of room to be creative, a lot of room to make money in sideways markets and different market conditions. So I trade all of them, and the reason I like all of them is because depending on different market conditions and market correlations, I'm a big follower of Ray Dalio and Sam Seiden, so I do a lot of both. Different market conditions call for different asset classes and different opportunities in Forex or in futures or in options, depending on what's happening and how much risk I want to take. And then there's penny stocks. I know a lot of you guys love penny stocks. They're very popular. A lot of you guys follow Tim Sykes. I have nothing bad to say about Tim Sykes. I respect him so much. My discord with penny stocks is that time is money. So when it comes to learning technicals or fundamentals, I love them both. I've been doing this for right around over 10 years. But with penny stocks, you kind of have to be very, very mindful of both fundamentals and technicals, as well as liquidity and a lot of other things. So if you're newer to the markets, it might be a bigger learning curve to master the world of penny stocks, because you do have to kind of know and understand both. With the other asset classes, in my opinion, you can get away with doing the fundamentals or the technicals, and you don't have to overwhelm yourself understanding all of both. So in the spirit of time, the path of least resistance in timing, in my opinion, if you're new, would be any of the other asset classes. Because they require less data. And then you also have to be on top of penny stocks. You kind of have to babysit them sometimes and kind of know what they're doing. Because of lack of liquidity, you kind of have to do that. So I don't do penny stocks really ever. Then there's a cryptocurrency. And that is a fascinating world, in my opinion. And not just crypto, not just Bitcoin or any of the other ones, but the actual world of blockchain. And I will do a whole video on that. And it's really exciting. I think it's the next internet. It's revolutionary. It's an exciting time. And I think right now is the best time to really learn and understand the financial markets, because as robotics get bigger, and people are concerned about jobs, and a robot's going to take my jobs, and there's more there's more systemizing, and jobs are leaving or getting cut. Creativity, in my opinion, you can't buy creativity, and we all need it. You can't, it's like art or whatnot. So we're gonna be left with a lot of TV, film. We're gonna still be left with those things, and then the financial markets, as the world gets more technologically savvy, more digital, and the liquidity of the markets and what they provide, anyone will be able to do it. It's a pretty low barrier to entry, and I think it is a lot of the future of where we're going. I think a lot of network marketing will be threatened by the rise of technology. Sponsors and new media will continue to be king, in my opinion. You guys will do great. YouTube's gonna do great. But as far as income goes, out of those worlds, I think the financial markets are the future in a lot of ways for a lot of people, because you can control it yourself. They're very liquid. There's a lot of personal responsibility attached to it, which I think is great. I'm a big proponent of personal responsibility, and I think if you may not necessarily need in a couple of years from now, a lot of jobs, but as long as the financial markets exist, and up, down, or sideways, as long as they're moving, people can make money, no matter where you're at, no matter how much you're starting with, or any of those things. So I think right now is a fantastic time to look into it. If you're at all interested, follow, subscribe, like. I will do a lot of videos on different specifications of asset classes, so options, futures, forex, in a chronological Forex 101, 102 series, options, etc. So thank you so much for watching, guys. Like I always say, trading investing is, you can make a lot of money, but you can also lose all or more of your accounts if you don't know what you're doing. So read your disclaimers, your disclosures with your broker. Take anything I say as educational. Nothing I say is advice or hold recommendation. Do your due diligence. Make sure trading is right for you. And until next time, guys, thank you so much for watching.